Thomas, and welcome to our 2021 prediction series, where we'll be speaking to a range of industry experts as they share their insights and outlook for the year ahead. On the line now, we have Patrik Zekkar, Global Head of Trade Finance and Working Capital Management for Nordea. He'll be speaking to us about trade flow recoveries in 2021, whether we're out of the woods with regards to supply chains and the role trade finance solutions will have in aiding recovery post-pandemic. So welcome, Patrik. It's good to have you on again.
Thank you very much for having me.
No problem at all. So yes, I think the last time we spoke was actually back in 2018 at Sibos in Sydney. So it's safe to say quite a lot has moved on since then, not least in the realm of trade finance. But without going back that far, it'd be good to start off by talking about the impact 2020 has had in this space. So can you tell us a bit about some of the challenges it's brought to trade flows, and what are some of your expectations for recoveries in 2021? Let's start there.
I think a lot of things has happened since 2018. So let's not dwell on that. I think everyone has had a difficult or different year, 2020, and especially, in trade, it has put some mark on the future. But if we leave that behind us for a moment and look at 2021 and the outlook for trade, I would say that I'm cautiously optimistic about 2021. We have finally, start to see the rollout of the vaccine programs in different countries. We have seen economies starting to unlock, which gives kind of a sense that we will now start to see some stronger recoveries. But I think still there is a fragilence in the recoveries. I think we will continue to see a vulnerability a vulnerability towards macroeconomic shocks. It could be smaller shocks, but the reaction could be quite substantial. And then, of course, not to be forgotten in these days is the impact of the Biden administration taking over. I think it has had some impact on the trade wars, which we have been facing for the last couple of years. And I don't expect that there will be much of a dramatic change. It will be different in the approach towards utilizing tariffs, the relationship between US and China, US and European Union, etc. So no immediate easing there, but they will have a different shape, which we need to understand how to deal with.
Mm-hmm, mm-hmm.
The last thing I would like to mention in 2021 is we are coming out of the pandemic. We're coming out of in many countries challenging time. So now we will see a struggle for the recovery of the domestic market, which will have the risk of leading to further protectionism in order to protect the local and domestic manufacturers, jobs, and also what has been arising lately, protectionist around certain security sensitive sectors like telecom, etc., which also will have an impact on how we trade and how trade develops.
Mm-hmm, mm-hmm. That's interesting. So you've definitely painted the picture there, but I just want to talk a bit more about supply chains and how do you think what they're going to look like and evolve as we move out of the crisis. I think that's where you were heading already.
I think we're coming from now a year where we experience a very fragile supply chain, which has been stabilized quite a lot as we see that people has managed to deal with the situation. Though next step, if we now during 2021, and I would say the second half of 2021, because we are still in many places in a lockdown mode, there is an expectation on that it will be a built up demand. So on the buyer side, which means that there would probably be imposed some stress on the supply chain system, where and the manufacturing and the distribution network, trying to fill that gap of demand, that increasing demand. So let's see how that plays out.
Mm-hmm. All right, so taking that into account, what role will supply chain finance and other trade finance solutions have in aiding our recovery post-pandemic? What about that?
Yeah, I think we will see a shift. Currently, trade and supply chains has primarily been covering the needs during this last year of providing security, providing liquidity, and financing to get through difficult times. So it has been a kind of defensive approach using the trade and supply chain instruments. But as markets are opening up, trade is the wheel is continue to move faster. There will be a more positive approach towards the instrument in terms of moving it towards growth and expansion agenda, and utilize them to capture more business and growth. So from an defensive, risk mitigating, preserve my liquidity strategy towards I want to win this contract, sales financing, market entry, support product. So that is kind of the positive momentum shift I hope and trust we will see.
So Patrik, I really want to end on talking about a bit about the adoption of digital technology. So how do you see this developing in the year ahead then? Do you think we'll see more of it?
I think it has been said several times already, but it's worth repeating that what we learned during these times is that the digitalization is no longer optional. It has proven its business case, and I think there's three levels for trade and supply chain, which now will move faster in the development. First of all is the digitalization of the actual trade processes. The existing processes will be digitalized. We need to be more resilient and less dependent on paper and geographical locations to be in. So that's one. Two is, of course, the digitalization of the actual instrument, the digital guarantees. That's the second lever we need to pull and move forward with, which I think will happen. And third is, where we switch, how do we conduct trade, the platformization, the total change of the supply chain management or the financial supply chain management, where platform and DLT technology come into play in a much larger scale than we've seen so far. Then, of course, that will increase the pace of the kind of integration of the platform. So from that point, it's a little bit dependent also on how we will see the corporates moving or changing based on this learning from this pandemic. When I talk to different corporates, it's a little bit mixed approach. Some of them are looking at a complete centralization of the treasury function and the way they operate trade and cash. Others are looking at we need to risk mitigate and decentralize, put a smaller treasury function in each region, I think the demand from the customer will ultimately steer how fast development will move in terms of our services. But it will definitely, if we look at the pace, the coming 3 years will show a much faster development than the last 3 years for sure. And at least I will have one thing right.
Well, Patrik, thank you so much for sharing your predictions and kicking off our prediction series. It's been a pleasure. And sorry we couldn't be in the studio this time and have to speak virtually, but hopefully further down the line we'll have you in. So thank you very much and have a lovely day.
Thank you very much. It was a pleasure.